Hi everyone, welcome to Triumph's FX channel. Today we'll be looking at how to know strong supply and demand zones, how to identify a strong supply and demand zone in the Forex market. So somebody once asked if it is possible to know a strong supply and demand zone and why some supply demand zone fail, and how do we identify the ones that will hold so that we can trade those ones. Well, supply and demand zones can fail, that is for sure. They can fail, they do fail. Some hold and some fail, and due to the fact that we are not the market makers. The market is controlled by market makers, and they don't trade with indicators. So they do what is in their mind. So whenever they change their mind or whenever they decide to move the market will move the way they want it to move. So it's one of the reasons why supply and demand zones will fail. Then fundamental changes, news can as well make some zones to fail. Maybe where you are expected that price will go and retest the zone and to go to your expected direction, because of news or fundamental changes, the market may not go as you expected. Another reason why they can fail is when there is a lot of liquidity in a particular point. Maybe let's look at this point, for example, and the market makers tends to come and grab that liquidity. So look at here, there's liquidity here at this point, a lot of money here. So people have placed a orders here. Some have placed buy orders here, some have placed sell. That when the market gets here and breaks below this zone, market should sell. And while others will place their uh, buy limit here, and when the market gets to this point, it should reverse and go up. So what happened here? Market got to this point, or market moved away, and price came back to this level and broke below it, taking this the sell limit of people here, and those people will be thinking price is actually going to their direction, and afterwards the people who placed a buy limit here, who were happy that price has started buying, will lose their money when price is stop loss. And after taking liquidity from here, the market decides to reverse back. So when market seeks to take out or grab liquidity, the supply zone, a demand zone here, there will be a demand zone here, it will not hold. So you cannot actually say for sure this is the zone that will hold or this is a zone that will not hold. So that is why every strategy you follow the rules, and there is no holy grail. There is no perfect strategy. But we have rules so that we can manage our losses or reduce the number of losses that we can have in a particular trade. All right, so what I advise you to do is to choose a strategy that best suits your psychology and follow the rules. So I'm going to share with us briefly how best I trade the supply and demand zone, and it has been really profitable for me. So if you would like the method or the strategy, you can apply it, but make sure you test it first back test it, then test it with a live market for you to know if it will work for you or not before you can apply it. So, what kind of supply and demand zones do I like to trade? So, I would like to trade a supply and demand zone that is strong, a strong supply or demand zone. And what I look at for from this supply and demand zone is that when that supply or demand zone is created, there should be an impulse move. There should be a sudden move or an impulsive move. Look at here, or let's use the 1 hour time frame. When this zone was created, there was an impulse move. When this zone was created, there was a push, an impulse. When this one was created, there was a push. As this one was created, a sudden or impulse move. That is what I want to see. Then when I see that happen, I will consider that that zone is strong or may likely hold. Then the second thing I look out for is that when the zone is created, there is a break in market structure. Look at here. Market structure was broken here. The zone was created and market gave impulsive move, or a sudden push up, breaking the market structure, came back to retest the zone, and that was how it moves up. So I want to see an impulsive move or a sudden push up or down from a supply zone, from a demand zone push up, from a supply zone it pushes down. Then I want that push to result in breaking the structure of the market. Then another thing is I want to see a rejection on where that zone was created. I want to see either a rejection, an order block, or a railroad track happening in that point. So if you look at here, we have rejection here. See these wicks, they are rejection. So once I see these items or these things happening, I will know that that supply or demand zone is strong and may have a high probability of holding. So what did I say? There should be a sudden push from the zone when it's created. That push will result in breaking market structure. And the zone should have a rejection. There should be a rejection on the zone, an order block, or a railroad track. So this one has an order block, sorry, rejection. So let's see if we look at this one. There's a sudden push here. This is an order block. This last bullish candle resulting to this downward push. So this is another block. It should have another block, or the zone should have a railroad track when it is created. So look at this one. This zone had a railroad track. See these two candles, they are the same length. So there should be this, an order block like this, or a rejection. Then either of the three should take place, then together with an impulsive move that breaks market structure. So once that happens, I will put an eye on that zone to trade it. So when I trade, I use the 1 hour in combination with the 5 minutes, or I use a 4 hour in combination of 15 minutes. So when I see a zone created in the 1 hour time frame, I will wait for the rate test of that zone. On the rate test of that zone, I will go to my 5 minutes time frame to look for an entry. I don't want to take an entry once a zone is retested because that zone may not hold. So I wait for the same thing that happened on the 1 hour time frame to repeat itself in the 5 minutes time frame. So that is to say, on the retest, I should have a zone created in the 5 minutes time frame. And the retest of that zone, I will take my buy. So let's look at this one. Let's just use this as an example. This is on the 9th of February. This zone was created. Let me go to 5 minutes time frame. This is the 9th of February. So when the zone was created, price came back to retest it here. This is the retest. And you can see that in the 5 minutes time frame. So on the retest of that 1 hour zone, I will go to the 5 minutes time frame, which is here. This was the retest of the 1 hour zone. You can see a new zone, a new demand zone. Look at it here. Let me take it out. Was created. Look at it. So a new a demand zone was created. So what am I waiting? I wait for a retest of that zone. So price to trade away from it. This is the previous zone that was here. The new one is here. So this is a new one that was created. Look at it. This one. So price should trade away from it with an impulsive move and have a rejection here, but there was no break in market structure. But as far as there's a break in market structure in the 1 hour time frame, and the 15 minutes time frame, I'll look for a zone that's created and retested. So once this new zone is created, on the retest of it, I'll take my entry. That means I'll be taking my entry here. Then my stop loss will be below this zone here. This will be my stop loss. And this is where I'm going to look at for my take profit. So my take profit will be from where the first take profit be from where price came back to retest the zone, which is here, this level. Then my second take profit will be the next swing high, and final take profit will be a supply zone that is above. So first take profit will be here. This is my first take profit. Then my second take profit, I will use the 1 hour time frame. This is the second, this is the first take profit, second take profit. First take profit is here, and the final take profit will be on this zone. Here, this is my second take profit, and my final take profit. So you can see. So if I don't see that happening, I will leave the trade. I'll just leave the trade. So let's look at this one. Look at this one. Let's see what happened here. This is on the 11th of February. So this is 11th of February. And we had this zone created. This zone was created. I'm still on this trade running, and this one was created. This one was created, no retest. This one was created, no retest. This one was created, and we had a retest here. So let me see when it happened on the 5 minutes time frame. Here, this is where we have the retest. You can see that this point. So this is where we have the retest in the 1 hour time frame. So when price came to retest this zone, there was a zone was created here in the 5 minutes time frame. So on the retest of that zone, that is when I will buy. But market did not go back to retest it. So as price trade away from it, I want to see price retesting it before I buy. If not, I will allow the market to go. Or coming down to retest, you didn't get to it, and a new zone is created here. I'll wait for that the retest of that zone. If it doesn't happen, I'll leave it. So like that one was gone. So look at this one. Let's see. Look at this zone. See when it first it got retested the first time here, which is on the 12th of February. Yeah. So when price went to retest it is here. So we can see it in the 5 minutes time frame. So a new zone was created. I'll wait for price to retest this zone. If it doesn't retest it, I'll wait for a new one to be created close to it on the retest of it. But there was no retest. I think if price had got to this level, I would have taken an entry here. This is another block, which is a supply zone. This is supply zone. So marking out that supply zone, you see price came to it here. This is a candle. Look at price came to it here. This is my entry. So you can mark out a supply zone here. This is an order block, resulting to a downward move that broke the market structure. On the rate test of it, you can take your entry, and this other entry goes down. So first take profits will be here. Second take profits will be here. Next take profit will be a demand zone. So, but if you are confused, I wouldn't even want you to start marking out other supply zone by yourself. If you want to use the indicator, you can use the indicators. If you are using the indicator, focus on the indicators. If you are not, forget about marking it by yourself. So that is it. Then let's see. Let me look at US 30. Okay, look at this one. US 30. So this happened on the 10th of February 2021. When is 10th? Okay, this is 10th. So a zone was created with an impulsive move, breaking market structure, having an order block. So on the retest of the zone, this was when price retested the zone. Yeah, you can see that. So this is where price retested the zone. So, but when price is going to retest the zone, maybe there was a zone that was created and it got broken with these wicks, maybe with this one. So what I want to see a zone created, but here there is no zone here. Maybe there was, but because of this wick, it was taken out. Then I will wait for a new one to be created, which is this after this retest. So when this retest happened, I didn't see a zone. When this one happened, I didn't see a zone until here. So on this second retest, this is when a new zone was created. On the retest of our zone, I will take my entry. So my entry will be at the bottom of the zone, and my stop loss will be just above the zone, and my take profit, I'll use my 1 hour time frame as my take profit. So here, this is where price moved from to go and retest zone. That is my first take profit, and my final take profit will be on this demand zone. So that is how I trade it. Let's look at this one if it worked out that way. You don't need to rush in taking trade. If a trade don't go well for you, your entries, your criteria are not met, nothing, no need to worry yourself. Ignore, just allow the trade to go. Look at this one here. We can see that this zone was created with an impossible breaking market structure here. Then it created a rejection. There's a rejection here. So we are waiting for price to retest, and this is where price came to retest it. So here, price came to retest this zone here. On the retest, I want to see a new zone form. On the retest of that zone, that is when I'll take my entry, not this zone. So I'll wait it, I'll wait, then price came here, created this zone, and look at this one, this candle. It's tiny. You may not see it very well, but that was the retest. Yep, look at it. Very tiny doji candle. That was the retest. So I'll take my entry here. You have to be patient. You don't need to rush. Forex is not a get rich quick scheme. Take my entry here, my stop loss here, and I'll be looking for my take profit will be where price came from to retest the zone. When price moved away here, this is where price came, moved from to retest the zone. That is my first take profit. Then my final take profit will be on this zone. So I can be using every swing high until I get to this supply zone as my take profit. And that is where this market got to. So that is how you will know a strong supply or demand zone that you can trade. And when you trade it, I wouldn't advise you to just jump into it when the rate test happen because the zone can still be broken. So don't just rush into taking the trade. Let what happened in the higher time frame repeat itself in the lower time frame. Then you take the trade. So if you want to see this indicator, you can see the link to my free Telegram group below in the description. You can click on it, join the group, but at the file section, you will see the indicator. The name of that indicator is supply demand, SupDem V2. You will see it in my free Telegram channel. So if you want to join my paid VIP group, you are free to do so. My contact is below in the description of this video as well. We also run training on Volatility 75 index. All right, thank you for watching, and I wish you all the best in your Forex career.